Hey, Kevin here, top 1 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I want to give you a plan to reach your first $1,000,000 and give you an accurate representation of how long is it going to take. Because yes, the market has been kind of weird, but I always talk about the long term, talk about the importance of investing and how you can invest with any amount. But if your goal is to be a millionaire, how do you do that? How long is it going to take and how does that work? So before I go to the screen share and show you the math behind this, this is a very simple concept, the same concept I teach almost every day in my free class right here at buildingbread.com/free class. I give you a plan for your first 100,000. I've said before, your first 100,000 is the most important investing goal, period, because you get the first 100,000. For some it takes 6 years, 7 years, and then the next one is shorter than that, and the next one's even shorter than that. So here's how it works. In investing, in the stock market in particular, but this can also count for crypto, it can count for business almost, it can account for almost anything because the math is still the math. It is basically how much do you have to invest, how aggressive can you grow that money, so that's the interest rate, how quickly is it growing, is it 10%, is it 5%, is it 7%, and then it is how long is that money compounding for. So if you want to be a millionaire in 5 years, you either A, better have a whole lot of money to put into the market, or B, you need to be really aggressive and grow at 25 or 30% a year. Now that's probably a little unrealistic. However, those are the factors. So if I say, look, I'm in my 30s, I want to be a millionaire by 50, that gives me 20 years or so of compounding. So I don't need as much money. I don't need to be as aggressive. So those three factors are the three variables that you get to play with to decide how quickly you can become a millionaire, or estimate how quickly you can become a millionaire. So here's what I'm going to show you now. I'll go ahead and go to the screen, and you'll see here, this is from Bankrate, and again, the math is there. So everything is already built in behind you. So for example, let's say you're 25, and let's say your target year is by 65, you want to be a millionaire. Now, you might be thinking, okay, if you're 25, and I'll change these ages around, but if you're 25, you're watching this video, and you're like, 65, that is 40 years that I have to wait. That's fair. I feel you. I'm not even 40 years old. I get that, okay? But the time is going to pass anyway. And that is the key thing. You can either grow the money and in 40 years hit that million, or wait 40 years and have nothing. That's really the option. Now I'll also show you, if you want to do it in 5 years, you want to do it in 10 years, I'll show you the numbers and we'll see if that's possible. So it's really how much do you have to invest and how aggressive can you be to hit those numbers. Okay, so let's go ahead and look at it. All right, so for example, you start at 25, you can change these numbers. Again, it's at bankrate.com. You see the URL here. If I remember, I'll put it in the link below. All right, so let's say 65. This is just the time they have set on here anyway. And let's say I'm starting at 0, which obviously is something that matters at where you're starting at. And let's say that I'm only investing $100 a month. So that's gonna matter, right? The more I can invest, the more I can compound. So let's say I'm only investing $100. I'll go ahead and calculate. So at 65, I'm only gonna have, let's call it $250,000. Now, $100 a month for that long is better than putting in your savings. But let's make some adjustments. Let's say that 7% is the average. That's what we say the average is over the last 50 some odd years. But let's say you're a much better investor, okay? Now, I wouldn't play with the 7% a whole lot, but let's just say that, you know, I'm going to be very heavy in Apple. I'm going to be very heavy, and I'm picking some out the air, Target or Domino's or Starbucks or something like that, and maybe I can get 15%. Again, most people tell you this is unrealistic, but I'm just giving you an example here. And let's say, hey, now look at that. If I do that by itself, at 15%, I got 2 million at 65. Notice how quickly that changed. I went from 7% to 15. Now the question is, how realistic is 15%, and can you do that consistently for 40 years? Depends on what you invest in, depends on how disciplined you are. Okay, so that is a question mark. But you can see by changing that one variable, by saying I need to be getting 15% and I'm going to adjust my portfolio to do that, perhaps I'm going to be way more aggressive. In some cases, maybe you're going to be too aggressive. But in either case, you see here, changing that one variable went from 250,000 to 2 million. Got it? That's one thing you could do. But let's go ahead and change this back to 7. Okay. All right, so I'm back at 250,000. Let's say though that at 25, maybe I have more money to invest. Maybe I'm rearranging my budget. $100 is okay. What if I can do, let's say, $500? And this could count what you have in your 401k. If you have one, this money could count. So let's say you do $500. Boom. Okay, I went from 100 to 500. Now I'm at 1.2 million. Just like that. I got 7%. I can get this with an index fund. VOO can probably get you this. VTI can probably get you this. There are tons. And that's why I left at 7. 7 is the easiest thing for you to do. You can, now you can't guarantee it, but you can very easily get very close to that 7%. In fact, the S&P 500 got to 27 last year, and it got you double digits the year before that, and double digits the year before that. So last 3 years, you got well over 7%. But if you could do $500, and even if, let's say I got a job and they're matching me, maybe I'm putting in $250 a month and they're putting in $250 a month, which is still very low, but that's $500. And boom, millionaire, 40 years, I have 1.2 million. I can wait and have nothing if I'm not investing now, or I can just do $500 a month and hit that 1.2 million. Let's say that I want to go to 1,000. Let's say I really optimize my budget. I'm doing side hustles. I'm doing whatever I can do to put in $1,000 a month, and that number changes, and now we're at $2.4 million in the market. There we go. Okay, so this is just changing. We changed the rate, so how aggressive are we going to be? And then we went ahead and changed the deposit. How much am I putting into the market? My age and my goals stay the same. So you can kind of see how these factors change how everything moves. So let's say, now this is 40 years, right? 25 to 65. That's a long time. So let's say, all right, fine. I want to do it in 10 years, but I'm going to keep everything else the same. You'll notice very quickly that things are going to change. So if I'm not going to give myself 40 years for this to compound, 40 years for this to roll over and grow and grow and grow, I'm going to cut that down and say, hey, I want to do this by 40, which gives me 15 years. Not 15 years. That would be age 40, which is 15 years. Then I'm only doing 300,000. So it shows you that you have to be a lot more aggressive. If you want to say, I want to become a millionaire in 15 years, I want to become a millionaire in 10 years, then that means that something has to happen. You need to put in way more money than $1,000, or you need to be way more aggressive. Being way more aggressive in terms of what you're investing in is harder and a little bit more dangerous to do, because again, what goes up comes down sometimes, especially if you're talking well over 30% a year or something like that. So let's say if you had said, I want to put $1,000 a month in something like Bitcoin, you would have been fine up until now, right, where it dropped 50% and set you back. 2020 or something like that, you would have been great and you would have grown like 300%. So you got to be really careful about these particular factors. Let's say though that you are in a different situation. So right now, as of recording of this video, I'm 32, and let's say, I don't know, let's just say I want to be a millionaire by 50, and let's say I've been investing for a while. Let's say we got some money already invested. That money is still growing. Is that 20,000, 200,000? I want to do 200,000. It's always hard when all the zeros are smashed together. Let's say I'm putting in 1,000, and let's say I'm just doing the regular 7%. Calculate, and we're right above a million at age 50. So by giving myself another 18 years of compounding, we can do that, right? Look, what happens though if we do nothing? If I just say, I'm not going to put anything else, I'm going to let the money we got now continue to grow, and I can have 675,000 if I do nothing else, okay? Let's say if I bring this back and I change how long I'm going to allow this money to grow. Let's say I move back to 65. I'm giving myself, another 15 years of compounding. I do absolutely nothing. I'll leave it alone, and we can hit 1.8 million if I did absolutely nothing else based on the numbers that we have here. What if we continued to put that $1,000 in the market? Now we're looking at 3.3 million. So all of these factors can change. So what you want to do is plug in the numbers for where you are and work backwards to see what you can do, what works for you. And always remember that these numbers can change. Now, if you told me when I was 22, 25 that I'd be putting $1,000 in the market every single month, I'd be telling you no. However, the way the world works and the way the world should work, especially if you are actively negotiating, switching jobs, taking on side hustles, stuff like that money is going to automatically grow. It should grow as you grow and switch jobs. I did not start at putting $1,000 in the market. I started with 100 because that's all I had. I was 22. I was teaching in Dallas. That's all the money I had. And then I got switch jobs, got 401k. Then, I decided to put 15% of my salary into market. So that's a part of that, right? That doesn't count, I don't know, the money I'm putting in on public every month, or the $50 or $60 that y'all saw we talked about on Cash App that goes in. So there are more factors that go in here, but this is how it works. And this is why when a market takes a correction, when the market is down 10% for 3 weeks, almost a month, doesn't really impact me because I see where things are going. And this, again, is average. That 7% is an average that calculates the averages that, or the times that the market didn't go like we expected. And again, if you go back through history, you are very rarely going to find exactly 7%. You're going to see, the 30% down that was in 2020 but then rose. You're going to see the 27% that we got last year. You're going to see the negative whatever it was that we had in 2018. But again, when you balance and average those things out, that's how you get the number. But the key to building wealth in the stock market, and because these are numbers, it can be any market, is how much can you put in? How aggressive do you want to be? What is that percentage that you are trying to grow your money? What is the average percentage? And how long do you have for that to grow? That is a big deal. So if I can hit 3 million if I keep investing for another, 33 years. If I bring it back to 50, or let's just say 40, and I do this for another 8 years, can I have $1 million? Well, I went from 20 or 30 years to grow the money. Now we're talking 8. And now I'm not even going to have $500,000 unless I do what? Unless I'm more aggressive, or unless I find way more money to put into the market and say, what if I can find another $2,000 and invest $3,000 a month? That's not going to cut it. Not in 8 years. Not in 8 years, but if I say 10, if I say 15, then that's going to give me more time. The money's going to compound a bit more. Or I have to be more aggressive and say, look, I need a little bit more. Maybe I need to be a little more aggressive, take more risk, which is not always the best thing. But let's say if I did I already calculate? That gets me real close to it. So I would need to put in $3,000, which is way more. It could be out of budget, right? Or I need to be a lot more aggressive and push myself to try and get that 12%, which these two factors are hard. I don't have an unlimited amount of money. Not many people do. So these are the factors, is how you can find out how quickly you can become a millionaire. It also teaches you and shows you how things can grow over time. Now, the last thing I'm going to tell you is, let's say you do this, okay? Let's just put it an even 30. And it does matter what your target is. Just put it at 65. Let's say that you don't have anything invested and that you're only doing $50. And let's say that you're getting that average of 7%, which I readily believe you can do by getting an index fund over time. So let's say you do that. And you say, oh my God, I'm only going to have $86,000. That's not a whole bunch to retire on. It's not encouraging to me. And this is not enough money. And actually, I only put $50. I'm actually meant to do 100, but I'll leave it at that. This is still encouraging because, again, with just $50, and this is assumed no changes happen. So that's assumed that you don't get, let's say you get a tax refund. Did you invest that? That can change these numbers. All of these things can change over time, and be optimistic that it can change in a positive way. So it's better, even if it's only $50 and it's quote unquote only $86,000. That's still more than most. That is still more than most. But again, it's better than being at zero, and that's the most important thing. What you don't want to do is 35 years from now, 15 years from now, 20 years from now, start then and really condense that time. Another thing that I hear people say all the time is, and why I tell y'all, if you're paying off debt and investing, to do it at the same time, because if you're not, you're cutting out this time. So for example, right, you can have, let's do it this way. So right here, as you're looking at 30, from 30 to 65 is 35 years, okay? Let's say it takes you 10 years to pay off student loans, for example, and I'm cutting this down from 35, or from 35 years to just 25 years, assuming you're putting in the same amount. Then you go from 86 to 39. Now you could also argue, maybe you can put in more money at that point in time. Perhaps you could, and that's going to change the numbers. But again, do that math and you're still behind. If you even doubled what you had when you could have started with 50. Okay, so take a look at those factors. Just by changing the age, moving it up by 10 years, I can double and go from $50 to $100, put in $100 a month, which is twice what I could have did if I started at 30, and still ended up with more money if I started investing at the same time. So that's usually why I say you gotta split if you can. Pay down your debt while also investing, because at 10 years you're not gonna get back. You're not gonna get that 10 years back. Excuse me. That's not how it works. Okay, so this is how you can figure it out. Super easy. Encouraging, I think, for most people. And again, you might not see the number you want to see. It just tells you the numbers. Okay, you can improve those. You can take on a side hustle, negotiate. The job market is great for us right now, so take advantage of that. And do what you can, take numbers as you can, but this is how it starts. Start here, figure out what that number is, and then start to play around, start to be curious, and then this can also help inform your investing strategy, where again, an index fund can get you to 7. Go back and see what Apple has done in the last 20 years. Go back and see what a Microsoft, a Target, a Walmart, and Amazon, see what those have done in the last 20 or 30 years, just to give you an example to see, here's how a stock has performed by itself, an individual company, compared to an index fund, and see how those returns could be. All right, so that's how you do it. Just want to do something a little different. We'll continue this week with our regularly scheduled content. Still got some stuff that I want to get out if the market holds. I know the Fed says some stuff today. Still got some earnings. Microsoft did well. Tesla had some stuff to say. I'll have to dig through those and see. If you got a company that announced earnings this week and you want me to cover it, let me know so I can add it to the list and we can get to it. All right, that's it for me. Talk to you guys later.